In the next few minutes, you'll discover a completely different way to profit from AI. It pays dividends every single quarter. Massive companies are pouring hundreds of billions into it right now. I'll show you exactly how to position yourself to collect these checks, and it works regardless of which AI stocks go up or down. Here's what everyone's doing right now. Chasing individual AI winners, trying to pick the next NVIDIA, betting on which chatbot company will dominate the future. But while everyone's gambling on which specific AI company wins, there's a completely different approach, becoming landlords who collect rent from all of them. From my 5 years of investing and journey towards FIRE, I've learned something critical. The more you actually invest and experience both gains and losses, the more you realize something. Boring often beats brilliant. I'm about to show you $400 billion in deals announced just this year. They prove exactly that. Let me start with the massive scale. Most investors are seeing it but missing the real opportunity in it. This year alone, we've witnessed 2 deals. They should make every investor stop and think. First, NVIDIA committed $100 billion to OpenAI for computing infrastructure. Then, Oracle signed a $300 billion contract with OpenAI over 5 years. That's $400 billion in just 2 deals. Most people see these headlines. They focus on the AI companies making the deals. But here's what many miss. Every single one of these billions has to flow through companies that own the physical infrastructure, the buildings, the power systems, the cooling, the land itself. Someone has to house all those millions of GPUs that these deals are buying. Someone has to provide the electricity to power them. Someone owns the real estate where this AI revolution actually happens. But here's who's actually collecting the rent checks from these deals. This is the most important insight you'll get today. Data center real estate investment trusts, REITs. They're the landlords of the AI revolution. While everyone's betting on which AI company will win, these REITs collect rent from every single one of them. Think about it this way. NVIDIA might dominate chips today. But what if AMD catches up? Google might lead an AI search. But what if OpenAI overtakes them? You're constantly stressed about picking winners and losers. But the data centers housing all their computing power? They get paid no matter who wins. It's like owning the gold mine instead of betting on individual prospectors. And here's where it gets beautiful for income investors. These data center REITs are paying 3 to 4% dividend yields, paid quarterly like clockwork. Compare that to the S&P 500's measly 1.5% yield. You're talking about doubling your dividend income, just by positioning yourself as the landlord instead of the tenant. Let me give you specific names. Equinix, ticker EQIX, operates over 260 data centers globally. $77 billion market cap. They pay a 2.4% yield. They've delivered 22 consecutive years of quarterly revenue growth. Digital Realty, ticker DLR, runs 300-plus facilities. $43 billion market cap. Paying a 3.2% yield. American Tower, ticker AMT, provides the infrastructure supporting data transmission. Pays 2.8%. These aren't startups gambling on the future. These are established giants with 20-plus year track records, now sitting on the most valuable real estate in the modern economy. If you want diversified exposure without picking individual stocks, there are ETFs built specifically for this. The Global X Data Center and Digital Infrastructure ETF, ticker DTCR, 0.50% expense ratio. The Pacer Data and Infrastructure Real Estate ETF, ticker SRVR, 0.55% expense ratio. Both give you instant exposure to the entire data center ecosystem. Yields between 1.3 and 3.6% depending on the fund. And there's a tax secret here that expires in 2025. So pay attention. The Section 199 deduction gives you a 20% tax break on REIT dividends. This drops your effective tax rate from 37% down to 29.6% on these dividends. This is essentially bonus tax savings the government is offering for investing in infrastructure, but only for 1 more year. After 2025, this deduction disappears forever. Let me put this in perspective. If you're in the top tax bracket, that's almost 8 percentage points of tax savings. On $1,000 of REIT dividends, you save $80 in taxes. On $10,000, you save $800. This isn't just about the dividends themselves. It's about keeping more of what you earn. Here's something powerful about early retirement planning. Traditional FIRE calculators assume a 4% safe withdrawal rate. But when you boost your portfolio's dividend yield from 1.5% to nearly 3% with these infrastructure plays, something happens. You can potentially increase that safe withdrawal rate to 4.5%. Do you know what that means? You could potentially retire 1 to 2 years earlier with the exact same portfolio size. Think about that for a second. 2 extra years of freedom, 2 years of not having to work, 2 years of living life on your terms, all because you positioned yourself to collect rent from the AI revolution instead of gambling on its individual players. This isn't just about extra income. It's about buying back years of your life. The AI revolution isn't just creating software millionaires. It's creating a new class of infrastructure landlords, collecting predictable rent. While most investors are gambling on the next AI breakthrough, you'll be getting paid by all of them, every single quarter, like the ultimate diversified bet on the future. Now, if you're thinking about AI infrastructure dividends, you need to understand something: how the current Fed rate environment makes this strategy even more powerful. When I covered Fed rate cuts and FIRE acceleration, I showed you how lower rates create a perfect storm for certain investments. And these AI infrastructure plays fit that pattern perfectly. If you want to see how rate cuts can actually accelerate your FIRE timeline by years, not just months, check out that video next. Because once you combine the Fed's rate strategy with this AI infrastructure approach, you're not just building wealth, you're building a machine that pays you while the future gets built around you.